What's up, guys? We're back with another video. As always, they will keep on coming. I am a week late on this upload. I was supposed to upload it last weekend, either Friday or Sunday. I apologize, but this is going to be a part 2 of my most recent upload. We talked about $CAD, why it was bullish, how it was bullish, and all of the algorithmic concepts inside of the price action, which aligns with bullishness. We're also bullish dollar, as everyone has been watching happen. I'm not going to go in great detail about all the stuff we talked about in the previous video, but if you have not watched that first video, which is the video right before this one, you got to go watch it before you watch this one, in order for it all to blend together and make sense, and for you to get the most, insight from this one. Anyways, briefly, I'll talk about it. So we just talked about how CAD ran lower, ran below these lows as manipulation. We got displacement higher. When they moved higher, they left a fair value gap open, and they also printed a bullish daily order block that blended with that. And they stabbed down right into that, filled it, and then moved higher. I talked about how that following week, we're going to want to attack this level here first, and then go above these highs, and then look to attack that monthly premium level, which was a fair value gap. So we're going to talk about that, and we're going to see what happened. So I must admit, first, they made one more run lower, below this low. Notice they did not take out the swing low. If you draw a fib from this swing low to this swing high, it is still a discount of that trading range here. But I did not expect them to come down and run this low again, but they did, and that's all right. That's okay. We're waiting. We're waiting. When we're in a bullish trend, when price is trending upwards, bullish, when we think about bullish order blocks, what candle do we use? We use the bearish candle. So the bearish candles on this chart are red and the bullish ones are green. I noted this as my first draw on liquidity because it's a imbalance fair value gap blended with this bearish daily order block. The bearish order block is the green candle prior to the aggressive rally lower, all these consecutive bearish candles. So that's our order block, which is also blended with the fair value gap. So here's a good example. The order block, so let's say we're expecting bearish prices right in here, okay? And then they print this bullish candle. We don't freak out, because if we're bearish, if the trend is bearish, that means after every bullish candle, or the majority of them, price is likely to make a larger engulfing candle after that. As you see, because why is the bearish order block the bullish candle? Because price is going higher. It's getting more expensive. Like when you sell your house, you want to sell it for max profits. You want to get the most you can out of that house. Look to the right side of the chart. Price is getting more expensive. It's going higher. So the bullish candle is going higher. With the result of that, after it closes, we see price sink. So that's where the algorithm and I guess the institutions and all of those, the large speculators and all of that, that's when they make they price in, and then you see the huge swing lower, that leg lower. So if we're bullish right here, which we are, we should expect a bullish candle to form after this red candle. And we get that very aggressively. Our first take profit level, our first draw was actually hit rather quickly right after this huge drop. So this is manipulation. It scares everyone out of the market. They came back down to a discount one more time from swing low to swing high. Anything below 50% would be a discount. Stops could have been at the low. we'll just say 125. You could have got an entry all the way up to 127. So that's 200 pips. They stab above these highs here on the daily chart. And then sure enough, that first algorithmic institutional level was hit perfectly. And they do it rather quickly. What happened after that? We get more bullish price action. Why? Because now we are looking to target that monthly level above the monthly highs. And sure enough, let's go look at the monthly. This was the level I talked about in the other video before this one. I said we will be looking to trade above these highs on the monthly chart. And then they're going to look to fill in this monthly fair value gap blended with this monthly order block, which is the bullish candle prior to this down move on a monthly time frame. So this was our overall draw on liquidity. You always want to start that on a higher time frame if you're looking to day trade high probability setups. I am not a scalper, so I'm not on a 1 minute time frame looking to get in, get out real fast. That's just not me. Why can't I click this? Okay. So let's highlight that monthly fair value gap so you guys can check it out, and it's right here. So if you don't know where to take profit, your entries mean absolutely nothing. I told everyone in my group to start taking off. If you were in the CAD buys, start taking profits right in here. You blend it with time and price. So time and price. May 2nd, when price stabbed up in here, I'm pretty sure it was Thursday. What happens on Fridays a lot of times after a really big bullish week? They call it the TGIF, which is, that's what ICT preaches. And it's pretty much just, every candle has an open, high, low, close. So for instance, let's see. This candle right here is bullish, open, high. If you didn't take profits here, look where they close, right down here. So this monthly candle could go open. It's going to have a low, which was here, and the high, I projected it to be here. And then when it closes, it can retrace and close. So we don't know where it's going to close. I just figured this would be our draw. So we took profits inside of that level. And if you didn't do that and you had no idea about your overall surroundings in the market, like let's say you didn't have any idea this level existed and you were in buys on CAD, let's look and see what would have happened to you. You would have been pretty upset if you didn't take profits before the weekly close, because on Friday, they retraced lower. And you would have lost over 100 pips of your, depending on where you entered. Because inside of this price leg right here, all these candles on the daily chart, there was plenty of, 5 minute, 15 minute, maybe an hourly buy opportunities. You guys can do that on your own and dig inside of this price leg here and look for intraday session, New York session or London session buys on lower time frames, as well as inside of these candles here. So all this was talked about before it happened. Very similar to the ICT commentaries. I'm very confident. I mean, there's good traders out there, yes, but when it comes to as far as on my level, yeah, they probably exist, but they're not on Twitter. They may think they are, or they could be close, but I'm certain that they're not on my level. But anyways, so yeah, that played out beautifully, and I'm so glad we were able to identify our overall draw on liquidity at the monthly level. And if you don't believe me, I'll go ahead and show you real quick. This was the video, top-down ICT analysis, shout out ICT / predicting the future, because that's exactly what happened. Let's blow that up. So here was the monthly candle when I recorded this video. And here's me talking about the draw above the highs and how this monthly candle should end up targeting this monthly fair value gap. And you can see that right here. and it's roughly 29 minutes into the video. And I recommend you go watch that video. There's a bunch of really good insights in there, so I just wanted to show you guys that. Let's go ahead and finish these candles out. Okay, that was it. So where do we go now? I don't know for certain, and it's okay not to know. That's completely fine. When I don't know, I have to wait for more data. All I know is our draw got hit. They offered hundreds of pips. There was plenty of chances to get in sync with these buys. Buys are high probability. You do not want to sell anything. Why? Because we found our directional bias. Our directional bias was bullish from here all the way up here. That's a lot of fucking pips. And there's a lot of different setups on all time frames on your way up there. Who cares if you didn't catch these two down candles? If you didn't sell right here and you missed this sell for this maybe 128.5 down to 127.5, over 100 pips or whatever. It doesn't matter. You don't want to be involved in that because we've already arrived at our directional bias. And it's not just an opinion, it's a logical bias that is formed under the principles of the algorithm that we're taught by ICT. You do have to trust it. You do have to trust it. You know, you want to look at the charts and tell yourself, what has price previously done? And I went over that in the video prior to this one. We talked in greater detail about that, you know, running these lows here, how price consolidated and built in and engineered the setup. And then we got the manipulation below these equal lows, then the run up, displacement, fair value gap, order block, boom. So this is just a beautiful example that I really wanted to go over with you guys. And I'm glad that I could show it live before it happened. You know, it's pretty much like an ICT commentary. You know, it went to script. And I do this more times than not with my Telegram group guys, but I don't give them these videos. I'm doing it through text on Telegram, but they get it in advance. If you want in, send me a message on Twitter or Instagram and we can get you in. But yeah, I have no opinion on CAD right now. We could dip down into this fair value gap inside of these two bearish candles and resume higher if that dollar index wants to keep going higher. Right off the charts, this looks like a bearish order block, right? Right, that'd be a high. Notice the bearish order block did form, which is this candle right here, this daily candle. Then we got the huge drop. Notice it formed after price dug up inside that monthly draw. So that has me thinking, you know, if I was bearish on the dollar index going into this week, I would wait for price to come up in here and look for sells. But I'm kind of on the sidelines. Today is the market just opened. It's Sunday. Tomorrow will be Monday. I'm not going to rush into anything. So this was one trade example and idea that we went over with in the Telegram group in great detail. And I just wanted to show you guys. Now let's go over the second one. There was another one. This trade was actually taken last week. And I was pretty excited about it. And I would like to show you guys. So here, I saw nothing on Euro or cable or CAD. Well, after our CAD take profit was hit. I traded one day last week. When the market opened up on Sunday, I told everyone, I'm not going to trade until Wednesday. And I stuck to that. I didn't trade until Wednesday, and I was rewarded for that. I've been working on my discipline a lot lately, and I was very proud of myself for sticking to that. Monday and Tuesday had no type of economic news at all. Wednesday had major USD news for the New York session, so I wanted to wait for that. So you're blending time and price. Real quick, the dollar index.